Okay, can you guys see my screen?
Sure can.
Perfect. All right, so we're going to talk exciting things today, like payroll reporting and employment taxes. We'll get as far as we can get and go from there. So we're going to talk about quarterly returns, annual returns, correcting returns if there's a mistake, and then some other reporting requirements. So we'll probably get, through the 941 or close to it today, and then we'll pick up tomorrow. So first of all, pop quiz. An employer qualifies to deposit unemployment taxes quarterly during the first quarter of the year. Under what deposit schedule will it deposit taxes for the remainder of the year? Don't let it trick you. All right, tricky, tricky, tricky. It is D, based on the look back period status. So just because they qualify to deposit quarterly during their first quarter doesn't mean you just get to automatically deposit quarterly. It means you still have to follow your deposit schedule based off of the look back period. Does anybody know what the look back period is?
Oh, we just learned that last week. I don't want to give away the answer.
The look back period is July 1st of the previous year through June 30th of the year. So, I mean, I guess it would be 2 years. So July 1st, 2 years ago through June 30th of the previous year is the look back period for your current year deposit schedule. So I guarantee you that one, well, it was on my CPP. So keep that one in mind. All right, so quarterly tax returns, the purpose of the 941. The Form 941 is probably the most common tax form, quarterly tax form that you guys are all probably already aware of. Form 941 is used to provide the IRS with total taxable wages as well as payroll tax liabilities during the quarter, and those can be used to be matched against the employer's record of the tax deposits and the wage and tax information provided to the employees on the Forms W-2. So at the end of the year, you should have 4 quarters worth of Forms 941, and they should match what you file on your W-2 or your W-3, which has all of the total information from your W-2s that were filed. If it does not match, you will get a notice from either the SSA or the IRS saying that the two do not match. And then you have to go be an investigator and figure out why they don't match. So Form 941 is pretty common. Most employers file that. There is also a Form 944. And the Form 944 can be used if an employer has a history of annual tax liabilities of less than $1,000. So it's pretty uncommon if you have a business that your tax liability is going to be $1,000 or less. So most of our clients or most employers are Form 941 filers. But if you're super tiny, you can be a 944 filer. So just keep that in mind. Forms 941 have to be filed and signed. They have to be signed by an authorized individual. They can be signed by a reporting agent, but if you are having it signed by a reporting agent, then you must have in Form 8655 on file, which is a reporting agent authorization to be able to file and pay taxes on behalf of a different employer. So keep that in mind. If someone else is filing the return and signing the return, they must have power of attorney present and in order to be able to sign that return. If you're a designated third parties, Third party, you must check the yes box on the Form 941, saying that you were the third party designee and that you completed and filed the form. If you have a payment due with your 941, sometimes this could include monthly, if you're a monthly filer and you had a shortfall of payments, or if you are a quarterly filer, if your tax liability is less than $2,500, then you can pay the full amount with your 941. If you do that, make sure you include the 941V, which is the payment voucher that goes along with that. So filing deadlines, pretty standard. The quarter ends and you must file the 941 before the end of the following month. So first quarter ends on March 31st. 941 is due April 30th. Same for all the quarters. So June 30th, the second quarter return is due July 31st. The third quarter is due October 31st, and the fourth quarter is due January 31st. You do, if you pay all of your taxes timely, you do get an automatic extension that grants you an extension through the 10th of the 10th day of the next month. So that can be taken advantage of, but file on time is obviously preferred. All right, 941, guys, this is exciting stuff. So we're going to look at the 941 line by line. So line 1 is the number of employees. You're only going to include the number of employees who were paid during the pay period in each quarter that contains the 12th of a specific month within the quarter. And that month happens to be the last month of the quarter. So March 12th, June 12th, September 12th, or December 12th. However many employees were paid on the pay period contained in that period is the number of employees that you're going to report on line 1 of the 941. You're not going to include household employees. Those employees not receiving pay, pensioners, or active members of the armed forces. Line 2 is wages, tips, and other compensation. This is going to match up to line 1 or box 1 on the Form W-2. So it's the total wages paid, tips also included in that, reported to the employer, and then taxable fringe benefits provided and other compensation paid to employees that is subject to federal income tax. Things that are not subject to federal income tax could be a retirement contribution. I know Rebecca talked to you guys about that last week, or maybe it was the week before. It's all running together in my mind. But if you have a traditional reduction of your wages, a deferral to a retirement plan, then those would not be included in box 1 of your W-2. They would also not be included in box 2 or line 2 of the Form 941. Line 3 is going to be the total income tax withheld. So this is the tax amount that's withheld from your employee's wages. And then line 4, if you had no wages that were subject to Social Security or Medicare, you would check that box and then you'd move on to line 6. Very unusual, but I suppose it could happen. The 941 got a lot longer during 2020. Thank you, COVID. The line 40 or Form 941 did not used to have lines 5A I and 5A II on it, but it now does. So those lines have to do with qualified sick leave wages that are eligible for FFCRA credits. So line 5A under column 1 is going to be the taxable Social Security wages. So that's the total amount of wages paid to all of your employees that were subject to Social Security tax. If you have tipped employees, then you're not going to include tips on that line. Those are going to go down on line 5B instead. Social Security does have a limit on the taxable wages, and thus that limit is applied on this line. So nothing over and above the limit for any employee should be included on that line. Under 5B, column 1, is going to be those Social Security tips. So if you have employees that are earning tips, if they're you're a restaurant or they're a bartender or something like that, their tips would go on the line 5B instead of 5A. Line 5C is taxable Medicare wages and tips. So on this line, you're going to combine the two amounts. And then just keep in mind that Medicare taxes do not have a wage limit for the employer. There is a wage limit in terms of the additional Medicare tax, which is going to go on line 5D. So on line 5D, you're going to have your additional Medicare tax withholding. So any wages that were above and beyond the $200,000 are going to go on that line. And that is only taxable for the additional Medicare tax for the employee, not the employer. So then column 2, you're just going to do all of your calculations. So once you have your taxable wages in your column 1 for each of these lines, you're going to multiply by what they tell you to multiply by for to get your tax for column 2. I will point out that line 5A is being multiplied by 0.124, which is the combination of the employee as well as the employer share of Social Security. But lines 5AI and 5AII are only being multiplied by 0.062, which is only the employee share of Social Security. And the reason for that is because those wages per the IRS regulations are not taxable for the employer for Social Security. So that's why that is different on those two lines. 5B is going to be both employer and employee, which is why it's being multiplied by 0.124. And then line 5C is both employee and employer Medicare wages. So it's the 1.45% for each, which if you add those together, you get 2.9%. The bottom line though, 5D, the employer is not responsible for the additional Medicare tax, only the employee is. And that's why it's only multiplied by 0.9% or 0.009. Questions on that section? Great. I already talked about 5D. Sorry, I got ahead of my slides apparently. 5E is the total Social Security and Medicare taxes. So you're going to add up the column 2 of all of the lines above. Line 5F is a notice and demand for tax due on unreported tips. So if the employer has received from the IRS a notice and demand for employer share of Social Security and Medicare on taxes on tips that employees have reported to the IRS on form 4137, then you must put that on line 5F of your form 941, and you're responsible for paying that amount in taxes. So line 6 is the total taxes before adjustments. So you're going to add line 3, line 5E, and line 5F and enter that on line 6. The next couple of lines are going to be adjustments for any fractions of cents. So line 7 is the current quarter's adjustments for fraction of cents. This is just to enter adjustments for fractions of cents due to rounding, because unfortunately rounding happens. And so that's where those adjustments go. It's usually a few pennies, either positive or it could be negative as well. So that's what gets reported on line 7. Line 8 is the current quarter's adjustment for sick pay. So if you had any employees that were receiving sick pay from a third party, that information would go on line 8. On line 9 is going to be any current quarter adjustments for tips or group term life. So if you had any uncollected employee portion of Social Security and Medicare on tips, or any uncollected portion of Social Security and Medicare taxes on group term life, that's where this information would go. You're not going to include additional Medicare on wages in excess of $200,000 that could not be withheld from the employee's wages. If lines 7 through 9 require adjustment in a subsequent quarter, then you're going to use a 941X. You're not going to correct it on a regular 941. Line 10, we're just going to do some math, add up all of your lines 6, 7, 8, and 9. Line 11 is the qualified small business payroll tax credit for increased research activities. So if you as a employer or your employer qualifies for that, you will want to go ahead and enter that amount on line 11A. Real quickly, let's jump back. So line 11B, 11C, and 11D were also added from COVID. So the 941 now has worksheet 1, and it walks you through step by step using figures from the previous section, this section, lines 5, all of the A's, B's, C's, D's, to walk you through the amounts that are going to go on line 11B, 11C, and 11D. And it's to calculate the non-refundable portion of the employer credit for qualified sick and family leave, that's the FFCRA, as well as the non-refundable portion of the employee retention credit, or the ERC. So, and then you're going to add those two together to get your total non-refundable credits. Line 12, you're just going to do some math. You're going to subtract your non-refundable credits from line 11D from line 10. Line 13A is your total deposits for the quarter, including any overpayment applied from a prior quarter and any overpayments applied from any corrected forms that were filed. Line 13B, again, was courtesy of COVID. It's the deferred amount of Social Security tax. Interestingly enough, the second quarter Form 941 that came out and the third quarter Form 941 that came out, that line said deferred amount of employer Social Security tax, because it was the only the employer that was allowed to defer that for a while until there was a new law put in place that said that employees could also defer Social Security tax should their employer choose to allow them to. That was pretty uncommon, I believe, but they did have to change that line item so that it said deferred amount of Social Security tax instead of deferred amount of employer Social Security tax when that change was made. So lines 13C and 13D are the refundable portion of the credit for qualified sick and family leave wages from worksheet 1. So again, that worksheet 1 is numbers pulled from previous sections of the Form 941, and you do some math, and at the result of it gives you a refundable as well as a non-refundable. The non-refundable, again, was reported on lines 11. And then the refundable portion is being reported here. So line 13C is the refundable portion of the, the refundable portion of the credit for qualified sick and family leave wages. That was the FFCRA. And then line 13D was the refundable portion of the employee retention credit, the ERC. Line 13E is where you're going to add up all of your stuff. So you're going to add your deposits, your deferrals, and your refundable credits. And you're going to put that on line 13E. Line 13F, again, courtesy of COVID, the IRS came out with what we call a Form 7200. And the Form 7200 is where employers can file for advance payment of any credits that they're going to be owed throughout the quarter. So the credits that could be owed throughout the quarter are anything for FFCRA, or those credits for the qualified sick and family leave wages, as well as health insurance expenses that could be related to those items, in addition to the employee retention credit. So if you as the employer or an employer wanted to get advanced payment from those, they could have filed a Form 7200 and they would have gotten money from the IRS sooner than if they had waited and just claimed a refund on this Form 941. So if they got anything from the IRS from filing Form 7200, it would go on line 13F. 13G, again, we're just going to do some math and we're going to subtract 13F from 13E. So if you got money from the IRS based off of the Form 7200 that were filed, you're going to go ahead and subtract that out so you don't claim it again. Line 14, if line 12 is more than 13G, enter the difference. And on line 15, you're going to have if you have an overpayment, then you're going to go ahead and put that on line 15. And then you have two options. One, we can apply it to the next return, or two, we're going to send a refund. So this has never been so common. I've been filing Forms 941 for several years now. And in 2020 with COVID and all of that good stuff, there was many employers that had overpayments and were due credits from the IRS. And in my experience, those were actually being processed pretty quickly, which is cool. So the employers were getting money back fairly quick from that, which is good during this pandemic. Hint, 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 you should never have an entry on a Form 941 on both lines 14 and 15. You should never have a balance due as well as an overpayment. So be careful on that. If you have a number in both of those boxes, something's wrong. All right, continuing on. Part 2, line 16, says that if you had liability of less than 2,500, then you can deposit quarterly, and you can go pay that with the 941. You have to be a little careful though, because if at any point you as an employer incur a next day tax payment or tax liability in terms of federal taxes with that it exceed $100,000, then you are automatically switched to a semi-weekly depositor. So you want to be careful and make sure of that. If you ever have an over $100,000 tax payment, make sure that you switch to be a semi-weekly depositor. If you are a monthly depositor for the entire quarter, then you can go ahead and enter your tax liabilities per month in the boxes for month 1, month 2, and month 3. And the tax liabilities for month 1, month 2, and month 3 better add up to your total liability for the quarter. If you are a semi-weekly depositor, you're going to check that box, and then you have to complete Schedule B and also file that with your Form 941. And we'll look at Schedule B in a little bit. Line 17, if your business has closed and you're not going to file returns in the future, you want to check that box so that the IRS doesn't expect you to be filing returns. If you do not check that box and you do not file returns in subsequent quarters, then you're going to get penalties and interest for not filing. So you want to make sure that you definitely check that box and enter the date you paid final wages in the box on line 17. If you're a seasonal employer and you do not file a return every quarter, you can check that box. In most cases that I'm aware of, most of our seasonal employers, we just go ahead and file each quarter and mark it 0 for the quarters that they didn't have any wages in. All right. A company is a monthly depositor for 2020. On a payday, the company accumulates a payroll tax liability of $101,000. For the remainder of 2020 and for all of 2021, the company is required to deposit taxes how often? Semi-weekly. So that's that magic number. The minute you have a next day tax payment, you are automatically switched to a semi-weekly depositor for the rest of the year and for the next period. So their liability was over 100,000 and thus they're automatically switched to a semi-weekly depositor. So that is a magic number. You want to be very careful of that one. So more on the 941s. Part 4 asks if we can speak with your third-party designee, and if a client or your employer wants to allow that, then they can go ahead and check yes in that box, and they need to provide the third party's name, phone number, and 5-digit PIN. And then that designation expires 1 year from the filing date. So that person is only allowed to talk to the IRS about that return for the next year, and then it automatically expires. Part 5 is the signature. So you want to make sure that you have someone authorized to sign the forms. Hint, hint, hint. If they're not an important part of the company that has decision-making capabilities or officer status, then they're not going to be able to sign the return unless there's a Form 8655 or something like that in place. So just be a little careful of that. Paid preparers use only. That section must be completed only by someone who is paid to prepare the 941 and is not employed by the employer for filing the form. The preparer must also give a copy of the signed form to the employer in addition to the original that will be filed with the IRS. If the preparer is a reporting agent and has a valid Form 8655 on file with the IRS, then that section does not have to be completed. So if you have that Form 8655, then you don't have to complete the paid preparers section. To avoid errors on the 941, it's, important that you read line by line and just make sure that you're reporting what it's asking for, and make sure that all of your liabilities are reported accurately, correctly. Make sure it's signed. And then at the end of the year, when you have all 4 quarters worth of your Forms 941, you do want to make sure that those add up to your numbers that are being produced on your W-2s, which the W-3 transmittal form is kind of the summary of all your W-2s. So make sure that each quarter, if you add them all up, it matches the totals that are on your Form 943 for the year. And like I said at the beginning, if they don't match, you will get a notice either from the SSA or from the IRS saying that they don't match, and you'll have to figure out why they don't match. So there's a couple different methods to be able to file Forms 941 and Forms 940. 940 is the annual federal unemployment tax return, which we'll talk about a little bit later. But the filing methods are similar for both of these. So the most easy method is to file the Forms 941 or 940 through an e-file program, which if you're a reporting agent and have Forms 8655 on file for your clients, then you can use their program, and it's very slick and you can send them in. You can also do what they call online filing programs, and you have to have an IRS authorized signer through an approved IRS commercial off-the-shelf software. So if you're doing that, it does have to be approved by the IRS. So make sure that if you're using that, you do have an approved provider for your software to be able to do that. You can also mail the returns. If you mail the returns, the postmark date is the date that the return is considered filed. So we talked about the deadlines earlier. They're due the last day of the month following the quarter. So for example, Forms 941 for first quarter are due on April 30th. So as long as your form is postmarked on April 30th, you are good to go. So make sure that you hit the post office before the end of the day if you're going to mail it on the last day, so that it has a postmark on the day that it's due. Okay. If you are doing electronic filing, you just want to make sure that you have everything approved from the IRS first. So we as a company have authorization to e-file with the IRS, and it took us a while. We had to go through a testing process and all kinds of stuff to make sure that our files are accepted. And you want to make sure that you're working with a software developer that has the right tools to be able to assist with that. So just make sure that you do the testing process. It's kind of cumbersome in my experience, but it was well worth it, and it makes it super fast to be able to file each quarter. So, but if you only have 1 or 2, it's easy to mail them. So again, this is more about the being able to file online or e-file for these returns. Again, make sure that if you are filing, you have a Form 8655 on file. If you're a reporting agent. The other thing is that the electronic files that we send do include the Schedule B for semi-weekly depositors. Again, making sure that you're working with an authorized software company that's helping create those files to send to the IRS is super important. Multi-worksite reporting. So employers with more than one worksite must not only file quarterly state unemployment insurance contribution and wage reports with each state where there is a worksite, they must also file quarterly employment and wage reports with state unemployment security agencies, breaking down the information by industry and locality in each state where there is more than one worksite. So the Federal Bureau of Labor Statistics uses the information to conduct surveys and provide analysis. I will tell you right now, I got questions on this on my CPP test, which was surprising to me. I think the couple questions were centered around which federal agency wants multi-worksite reporting, which is the Bureau of Labor Statistics. So anyways, just a note on that one to keep that in mind, that you may want to look at that before your CPP. The MWR is the multiple worksite report, and it's pretty standard. And, most payroll softwares have a way of getting that information out of the system. And so you can file that online and it works pretty good. All states are responsible for collecting unemployment data and providing it to the Bureau of Labor Statistics, but not all of them require employers to file a report containing the information. So some states require it and some states do not. I recently heard that California is now going to have a new reporting requirement. So I think some of those things are coming down the pipe as a result of COVID and the pandemic, and trying to figure out some statistics on employers and employees and who's working where and all that kind of stuff. So be on the lookout for that. All right, pop quiz. If a monthly depositor pays 98% of its tax liability timely, when must the remaining balance be paid? So it can be by the due date of the quarterly return, which would be the Form 941, by the first Wednesday or Friday, whichever is earlier, after the 15th day of the following month, by the end of the month, or within 3 business days. So again, they're a monthly depositor and they paid 98% of its tax liability timely, but there's this little 2% hanging out that they still owe. So when must they pay it? It is A. Good job, guys. So as long as they deposit 98% of the liability on the due date, then by the 15th of the following month, then the shortfall can be paid with the Form 941. And again, make sure if you pay with a Form 941, you're including Form 941V, which is that payment voucher to show the amount that you're paying. So W-2s go hand in hand with Forms 941. Like I say, at the end of the year, your Forms 941 better match your Forms W-2, or you will receive a notice. I guarantee it, from the SSA or the IRS, or both, perhaps. So Forms W-2 must be given to each employee that worked throughout the year for each company. They must include the employer's name, address, and EIN. They must include the employee's name, address, and social security number. They must include the total amount of wages, tips, and any other compensation that was taxable and must be reported. They must include the amount of wages subject to Social Security, Medicare, state, and local income taxes. They must include withheld federal income tax, Social Security tax, and Medicare tax, as well as any state or local taxes, if there is any. And then some other items are required to be reported on the 941, on the Forms W-2, such as 2% shareholder insurance needs to be reported in box 14. Box 12 has a whole list of things that need to be reported in it, including, compensate or deferrals for retirement plans, also potentially healthcare that was paid on behalf of the employee. So we'll look at each of these a little bit more in depth. So Form W-2 has 6 parts, and the copies should be filed as follows. So copy A should be filed with the Social Security Administration by January 31st of the following year. So for 2020, the Forms W-2 should have been due and filed with the Social Security Administration by January 31st of 2021. Copy B is for the employee, and it should be given to the employee by January 31st. And that copy is for them to file with the IRS when they do their personal income tax return. Copy C is again for the employee, should be given to them before or by January 31st. And that one's for the employee to keep for their records. Copy D is retained by the employer. So that's the employer's copy. Make sure you're keeping it for a minimum of 4 years. Copy 1 should be filed with the State Department, if applicable. Most states have those due January 31st, same as federal, but some states have a little bit longer and let you go out to February 28th. But most of them are January 31st. And that's only applicable for states with withholding tax. So for example, Texas, Washington, Alaska, they don't have withholding tax in those states. And so we don't have to send W-2s to them. And then copy 2 is for the employee to send in with their state tax return. So when they file their personal income tax returns, copy 2 goes with that for the state from the employee. Form W-2C, which we'll talk about more later on, but for now, it's the corrected version of a Form W-2. And it's not necessary to file a Form W-2C to correct errors when the amount of the error is no more than $100, or there's no more than $25 if the error was made in a tax withholding amount, unless the employee asks for a corrected form. So the employee knows there's an error, even if it's less than $100, and the IRS says you don't have to do a corrected form. If the employee requests it, you do have to make corrections. Now, the IRS does not require you to do it, but like I say, if your forms W-2 don't add up and match your forms 941, there's going to be notices had. So the IRS encourages you to make corrections to avoid those balancing issues between the forms 941 and the forms W-2. If employers cannot get their forms W-2 filed timely, they can file a form 8809 to be able to request an extension, to be able to file those returns a little bit later. And I'll tell you just from my experience that there was quite a bit of form questions on my test for when I did the CPP. So I would know some of the bigger ones and be able to, process of elimination, because as we've said multiple times, all of the questions are multiple choice. So make sure that you can kind of filter out which forms are which issues. So Form W-2, box 1. Again, I said box 1 should match line 2 on your Form 941. So that's just wages, tips, and other compensation that's subject to federal withholding. So a rule of thumb that I think about when I think about a Form W-2 is your odd boxes are going to correspond to wages. Your even boxes are going to correspond to taxes. So wages are going to go in box 1, 3, 5, 7. And then your tax that goes along with those wages are going to be in the even boxes, 2, 4, 6, and 8. So box 1 and box 2 go hand in hand. Box 1 is the wages that are subject to federal income tax, and box 2 is the actual federal income tax that was withheld. Box 3 and box 4 go together. Box 3 is Social Security wages. This does not include tips because those go in a different box. And then box 4 is the Social Security tax that was withheld on the wages that are in box 3. Box 5 is Medicare wages. Goes hand in hand with box 6, which is Medicare tax. I will point out that the Medicare wages are combined for both the additional Medicare and the regular Medicare. So the regular Medicare withholding limit is $200,000, and anything above that, there's an additional Medicare tax, and all of those wages go in box 5. Box 7 is Social Security tips, and those should be included even if there was no Social Security tax withheld. That's part of why we have to file personal income tax returns, is if our employers did not file or did not collect the correct amount of tax, we as employees are responsible for paying that tax with our personal income tax return. Box 8 is allocated tips. Large food and beverage establishments will use this box, and they can enter the amount of tips that were allocated to the employee. That amount should not be included in boxes 1, 3, 5, or 7. Box 10 is dependent care benefits. Any amount greater than $5,000 must be reported in boxes 1, 3, 5, as well as box 10. So dependent care, the limit, at least for 2020, was $5,000. So if anything was withheld for dependent care benefits above and beyond the $5,000, it must also be in box 135 because it could not be pre-tax because it would be exceeding the limit. So the limit for being able to deduct dependent care benefits through some sort of FSA plan was $5,000. If anything in excess of that was deducted, then it would have to be reported as taxable income. Box 11 is for non-qualified plans. I know that Rebecca did the retirement section, so this was one of the boxes that she had discussed. It is the purpose of it is for the SSA to know if any part of the amount reported in box 1, box 3, or box 5 was earned in a prior year through a non-qualified plan. Box 12 is a big box and it has a lot of codes. And I'm absolutely not going to tell you every single code and what it does, but I would make sure that you're aware of the main ones. I did get some box 12 code questions. I would say, the retirement codes are going to be more of the popular ones. I would also say things like HSA and sick pay are going to be more of the popular ones. So take a note. I know Manon sends out these slides to you guys, so I would study this slide and also publication 15E from the IRS, and I'll have Manon include a link to that in her email so that you guys can look at that because it has all the box 12 codes and what they mean and what should be in them. Here's a whole nother list of box 12 codes. I do recall having a question on uncollected Social Security tax for group term life, which is the codes M and N. So just a hint on that one. It was kind of surprising to me to get a question on that, but I did have a question on those. So those ones are, I would probably pay attention to. Code S is again a simple plan for IRA. So that one may come up because it's a retirement plan. Code DD is another one, and that's the cost of employer provided healthcare coverage. So that has to be completed for any employer that filed 250 or more forms W-2 in the preceding calendar year. So, and that one is the total cost. So that would include employee contributions as well as employer contributions. It's the total cost of the healthcare coverage for the whole year. So code DD is definitely a big one. I would star that one for sure. Box 13 just has a few check boxes, and you check anything that's applicable. So if this particular form W-2 was being completed for a statutory employee, or if the employee had a retirement plan, or if the employee had third-party sick pay paid to them during the year, you would check the applicable boxes. Box 14 is an other box. It's an optional field for employers to provide information that they want to the employees. One of the big things that we see reported in box 14 a lot is 2% S Corp medical. So if the W-2 is for a shareholder of an S corporation that owns more than 2%, then the amount that was paid for healthcare for that employee is considered taxable income to the employee, which is a little different than a normal employee. So that information gets reported in box 14. There's also other things that some employers report in box 14. Like I say, it's informational for the employee. So things can be reported in there, but there's not necessarily a list of things that have to be reported in that box, if that makes any sense. Boxes 15 through 20 are not required for federal filing, but they may be required by state and local agencies for the state and local returns. So like I had said earlier, some states don't have withholding. And if that's the case, then box 15 through 20 is not going to have anything in there. But if you're in a state that does have withholding, then your wages and state taxes withheld and local taxes withheld would be reported in boxes 15 through 20. Perfect. Yes. Couldn't have timed that any better. One more question. On Form W-2, which box is matched with its use? So box 3 is that Social Security tax withheld. Box 9 is that dependent care benefits. Box 11, non-qualified plans, or box 13, payout from non-qualified plans. So the answer is box 11 is for non-qualified plans. Box 3 is Social Security wages, not tax.
And 10 is dependent care.
And 10 is
Doggone
dependent
it.
care. Yeah.
I knew it wasn't 3.
I will tell you, I had a dependent care question on my CPP exam.
So
as
did
well,
I. So I
so
should have
box
known
10,
it.
box 10 is a good one to remember. And then box it again, like I said, it helps me to remember the odd boxes are wage boxes and the even boxes are tax boxes. So box 3 saying Social Security tax is my hint that it was wrong because I know my taxes are in my even boxes. So that's my hint. We're a minute overdue. I'm sorry for keeping you late. But we'll pick up where we left off tomorrow.
Super. Thanks, Melissa.
Thank
Thanks,
you guys.
Melissa.
Have a good day.
Bye.
Bye.
Bye.